Well, hello again, traders, and welcome out. This is Ankit from Currencies here, and this is a market recap for Monday, October the 17th. Let's break it down, today's market price action, and talk about our upcoming 24 hours. There's a lot going on in the market, so let's talk about it. So today's markets, again, quite a U-turn from Friday, big reversal. So last three trading session has been quite a volatile market condition, and this is where we start to ask this question: are we trying to carve out a market bottom? Because if you look at the last 3 days of price action, of course, this is a big candlestick or a big range that we're dealing with. On Thursday we had a massive reversal. Now with a big of a reversal on a Friday, and here we are with another reversal. But notice that we are recovering slowly. So as we are closing into this 20-day moving average, if we can get above this, this will be again a positive sign, and for markets to rally a little bit further. So markets are again very pessimist, and we have seen this kind of spill into the markets all across. But as we are noticing, there's a bit of a relief rally coming in, and as you can see, the world market index VT, we are sitting at 20-day moving average. So at this point, if you look back, we haven't been above the 20-day moving average since August and September, and here we are continuing to test that area. But at this point, the price actually looks a little bit better to me. So I think we have to really look at this market, and from both case scenario, what if we start to see a little bit of a better price action? So outside of that, we are not really seeing, again, not a whole lot of spillage into the crypto markets. But I think overall, if you just take a look at the market sentiment, I think we're seeing a little bit better price action than what we have seen just a week ago. So good solid gains today. S&P was up 2.65%, so that's a good percentage gain for the day. Outside of that, oil is pretty much flat, and then gold is gaining a little bit as well. So the equities, again, rebounding from Friday's move, which is again a positive sign if you're looking for a recovery in the markets. Outside of that, we had the dollar yen that actually hit the highest level since March in 1990. So again, we're seeing the same story play out with this Japanese yen and the dollar yen. So something we'll be paying attention to and talk about it for possible case scenarios. So as we take a look at the market sentiment here, I think we need to move the markets a little bit less bearish and moving it to a -1. Again, we're still below this 20 moving average, but most importantly, we're below the 50. But outside of that, I think as we're trying to push this above and start to make a bit of a higher high and a higher low, we'll start to see a bit of a better price action. So that's something we'll be paying attention to, especially tomorrow, as we get to see some sort of follow through and getting above this moving average. As far as the schedule goes, this is a lighter week compared to last week, but we still have notable events this week starting tonight. I know Rob discussed this. We are looking for trading around this China GDP numbers. We had the CPI coming this evening, but the China GDP numbers will be important, and I think I'll paying attention to the Aussie and the Kiwi will be our focus. But outside of that, I do like trading on a Wednesday the CPI numbers from the UK and the Canada, and then later on we have the Aussie employment report. So today and Wednesdays particularly seems like a better trading days with these news events. But even we are taking a look at today's movement, I think the price action looks a whole lot better as we go into tomorrow. So let's do a quick currency analysis and see, okay, what's moving percentage wise and where we need to pay attention to. As far as the cryptocurrency goes, you can see that we are seeing nice little gains in the Bitcoin and the Ethereum, quite better gains in the Solana. But overall, we have talked about this. We're seeing the crypto markets mostly consolidating in this range here. So of course, once we get a breakout, we want to play that breakout. Consolidation in a small narrow range, not really something we want to be jumping on right now. But as far as the currency goes, I think there's better price action in the currency market. And here we are starting off with very typical risk on environment. The Japanese yen and the dollar again taking a hit, down 0.132% on the Japanese yen, and dollar down 1%. So I think we'll be paying attention to the dollar in the next 24 hours because we could be potentially, if the markets start to recover, again, this is where the dollar is really catching a bit as a safe haven currency. So if the market sentiment gets better, I think we could see further continuation in the dollar here. So outside of the dollar, again, the Aussie, Kiwi, CAD, they all gained. We are also seeing the European currencies do better. I mean, the euro is up 0.34, pound is up 0.82%. So very typical risk-on environment. And I think at this point, if you just take a look at all the major currency pairs like Aussie dollar or even dollar CAD, I mean, we have seen some massive movements in the past month and a half. So if there's a correction taking place, I think there could be a decent next couple of weeks, we could see a nice little sort of correction in those currency pairs as well. So we'll be primarily looking at those pairs. As far as the velocity goes, I mean, we have the yen sitting in a -3 right now. So we got to talk about the yen here because we are seeing now yen being extremely weak and the risk for Bank of Japan intervention kind of increasing as well, especially as the dollar yen is above the 149 level. But outside of the yen, I think the dollar seems like a good play to me, especially if the risk-on environment continues. We can see the safe haven kind of bid kind of goes away, and then we start to see some of the other currencies start to kind of rise on that, like the CAD and the CAD, we talked about it. We'll talk about it, but I think Aussie and the Kiwi, they've been hit the most. The euro actually looking a lot better, so I really like the euro and even the pound here that's looking much better. So I think what we need to do is just pair things accordingly. I mean, if you look at pairings like euro yen and pound yen looks great, but if you don't want the yen exposure, I think even the euro dollar and the pound dollar looks great as well. But if you in the middle here, we have the Aussie and Kiwi, and I think this is where they can actually catch a nice little bit as well, especially if the risk-on environment continues. So let's talk about possible trades and where we can start to look at some decent setups. So let's start with the dollar basket. And as we can see, the dollar actually stalling a little bit here. And as we take a look at this dollar basket, I mean, we see that there's some sort of shorter term top over here. But as we take a look at DXY, again, commonly referred by a majority of the sources, if you look at DXY, now we're actually kind of making a lower high. So is this a reversion from a lower high to a lower low? And I think this is setting up very nicely here. If you just take a look at the DXY and we look at the long-term trend, I mean, we're still in this uptrend, but at this point we can sort of test this level, have a little bounce over here, and kind of move off from that. Again, that will be the best case scenario if you're really looking for dollar to roll over. But I think it's still early on. I mean, you look at the last 3 days, the last 4 days, I mean, the range has been pretty wide on this one. And what we need to see is a little bit more of a correction. Now, if we take a look at some of this other currency pairs, some of the other dollar crosses, I mean, we noticed that the volatility actually dropped a bit here. You can see that in the past few days, the volatility has been increasing. And usually as the volatility increases, we get a bit of a capitulation and we start to see a recovery. And at this point, you can see the last 3 days, the candlesticks has been quite wide. But if you can get above this area, there's a decent area for some of these dollar crosses to rally. I mean, noting the Aussie dollar, same boat here. When we take a look at Kiwi dollar, looking very similar. I mean, volatility has been pretty high and we're seeing a bit of a drop off here. And then as we go across, I mean, Aussie and Kiwi, they look pretty awful here. But if we take a look at currency pairs like pound dollar, even euro dollar, it seems like there's a better chance for this to rally higher, especially they've already established a higher low here. So at this point, especially if you look at euro dollar, this can easily get above that parity level that it's just sitting at. It's right now sitting at 98.41. We have this consolidation here, but I think as we get this little rally here, we get above this level. So it doesn't matter which currency pair you look at. I mean, look at dollar CAD. I mean, we had this nice little, fake breakout here. Look at the candlesticks in the last 2 days. But as you can see, where we were back in September and where it is right now, this is, again, a massive range that it could actually have a correction with. I mean, this is where we talked about it last week. Going into the CPI, I mean, the dollar has already had a big move of 7 and 7.5%. So this is where we are not really seeing a continuation, but we're actually seeing the dollar pulls back. So at this point, it all comes down to the equity markets. If the markets can recover, as this is the equity chart here, we can actually see the markets have a lot more area for this to recover in the shorter term. And if that's the case, I think short dollar would be the right play. Now, let's talk about dollar yen. Again, dollar yen, there's no better way to quote it. I mean, we we had this intervention right back here. You can see that this was a 600 pip range on this candle, and after that we are actually now way beyond that. We haven't seen any new intervention come in, but there's always that constant threat of a possible intervention. So something that really need to kind of watch out for. But again, if outside of that, if you look at just a chart here, it seems like the dollar yen is still on this uptrend here, and there's no end in sight. So if you go back in time, I mean, you realize that we are in this kind of uncharted territory here, especially, you go back like 30 years. I mean, 1990 was the last time that we were in this area. So for a lot of people, a lot of traders, this is sort of an area that they're not even familiar with. So I think, of course, there will be a time things will kind of come to an end. But at this point, no end in sight. Interventions can come in. And I think that's really where the yen crosses kind of are a little bit difficult. But if you look at some of the euro or some of the yen crosses, I mean, euro yen looks amazing here. I mean, look at the breakout that we've seen over here. But I think at this point, if I really have to look at the risk to reward, I'd rather stick with some of the dollar crosses, because even if the dollar yen, especially take a look at the dollar yen volatility, as the dollar yen is moving higher, the volatility is actually dropped down to the lowest since back in April. So we are not really seeing a big sort of change between the dollar and the yen. Maybe they're slowly creeping higher, but I think the risk is much higher in the yen crosses due to those reversal, due to this intervention. So I think outside of that, I do like dollar crosses, especially if you just go on a 4-hour chart. We are seeing a lot of consolidation, but if we start get to clear out some areas, we can have some decent rally. And again, those decent rally are good as far as the risk to reward goes. So a lot of the dollar crosses, that's really what I'm really focusing on. And then again, yen, as we discussed, we have to really pay attention to sort of possible threats for coming into this Bank of Japan intervention. So in conclusion, risk on sentiment continues as the market recovers. If the market continues to recover, I think it's better to be on the long side of the markets than the short side of the markets. Again, Bank of Japan will intervene again, something we just have to really keep an eye on, or make sure that you're using the proper stops in between so you don't really get in the wrong side of the trade, especially if things are moving really fast. Make sure you're using proper position sizing. As always, check the calendar. New classes coming this week. But again, I think this will be a great trading week as we are seeing more stability in the markets, which again has been something that has been difficult to kind of follow for some traders, as the volatility has been really the big issue. So if the volatility dies down, I think that will make it easier to be in some trades and have them last a little bit longer and hit your targets without getting stopped out. So that's the game plan. If you have any questions, reach out. Otherwise, we'll see you in the next update. Cheers.